TheNBI.com. This is John Portis for the 24th. The fireworks. Everyone's so excited. That was such a dramatic day. Nonsense. It's more of the same. So we had the weakness, a little bit of the fears from the whole, now you got both the Strait of Hormuz and the Red Sea block. It's a concern. It's a concern. The Saudis are going to have to deal with the Houthis, and then the U.S. deal with Iran, both of them incapable of resolving it pretty much. But hey, we'll see what happens. This is what the intraday looked like. 5K tick chart from yesterday. Yeah, that was pretty clean, straightforward down. Every time they made an attempt to move back up, it was clearly met with more selling and NBI weight spikes returning back to zero. And every attempt to barely go into a continually dropping 50% line. Then late in the day, it got a little bit of a rally just to kind of clear, but all that did was bring it back up towards the zero from earlier. And then it started over again because do you want to be overexposed in equities at this particular stage? No, not so much. But these are the geopolitical problems. If they get resolved, everything goes back to happy time and everybody's restored. I'm going to shrink this now because this range we were talking about has now been broken, where they broke it before to the upside. This middle range right here between the 75.60 and the 74.60 range has now been broken. We're pushing back up towards where that was. So that will be the key test right here at the low side of the 74. 75 range, really. And that'll be the unique test because once you decide from there, uh, it's a question of do we get more sellers popping in, people realizing that maybe things are not as desirable as we'd like. That, of course, caused Bitcoin to have a little bit of trouble. Can we price the chart? That make it easier to see. Yeah. So barely passed 23% and couldn't even make it to the 50. Same thing with gold, couldn't even get over the 23%. That's fine. These are going to happen when there's market sell-off conditions. The reality of the euro in this particular case will be an interesting because you had a couple of days of this, and now the reality of fall and winter for the EU looks pretty ugly, and that despite their dream of spending trillions for defense spending, still makes it rather unpleasant. Now, of course, these numbers with oil really are going to call into question what we're getting from the U.S. from a growth standpoint. Of course, nobody liked Tesla earnings or even Google. Yeah, and that is that secondary element we were talking about. It was, enough slowing in the U.S. economy due to these elevated prices for extended periods. You can last for a certain amount. The question was there ever significant enough wage or movement to allow people to absorb the inflation? No. So not enough time has passed from that standpoint. So having higher energy prices, a problem, big problem, economic problem, not going away anytime soon. So yeah. And I think it gets a lot worse and exponentially so. Is it theoretically possible to retrace this entire up move? Yes. When we look at the Nasdaq from this, it's been rather muted, pretty soft from a decline standpoint. Uh, what the lows of May, not horrible from that standpoint, but it's been in itself for quite some time since the war started. It's problematic because yes, the AI movement has been going strong, but also shows cracks, lots of them, because the whole power dynamic was something that was always known. I mean, we've talked about it. We're never going to magically create X amount of power, and now you've got these utilities admitting that all of their increase in insuring and trying to come up with extra powers to cover data centers. And now, of course, they're requiring data centers to have their own power. Well, you just automatically add megawatts into your systems. just because. If they could, they would have done it. Well, no, they probably wouldn't have because they prefer higher energy costs anyway, simply because so you make money. So, from an ES standpoint, yeah, we expected that the 50 would break when we had the MBI white lead. So, now that it has broken, the question becomes, does it sustain a move to the upside, or do we get that magenta, which is now still over yellow? If it holds that, then you've got the turnaround. But if it dips back down below and we get an MBI white moving higher, still haven't dipped below the red line. So those are real aspects that I look at. And of course, we're going to see it intraday first. Um, I think it's just still more bounce around until there's some clarity, because at the end of the day, it's going to take one incident or two incidents in both the Red Sea or the Strait of Hormuz, and things get ugly. And if oil starts to spike even as more rapidly than it has, yeah. And the Iranians seem very clear that they're not going to budge, that they think that they can wait this out for 2 more months and they're set. So that's their timeline. I've always advocated that you needed a disproportional response in these particular cases, that if you don't pummel them into submission and play tit for tat, they can last forever tit for tat. You have to inflict such a devastation, though politically I don't know that he can get away with doing that, but we'll see. Otherwise, they're not going to move. So just expect more of the same, unless you have a different calculus in the situation. Um, those are your only options. So you're either going to completely erode their ability to do anything, which have not been able to do it all these months. You're at a loss there. The fact that you have secondary Red Sea, that the Saudis can't take care of that side of the situation. Whew, yeah, complicated stuff. But all we gotta do is follow the readings. Pretty straightforward. Anyway, anything relevant, I'll put it on the team chat. Have a good one. Trade well.